Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going into the Sword portfolio for our weekly numbers. This is week number 3 because this is our newer portfolio, so we're just barely starting. This is our Sword portfolio. We're going to go over some of the features of the strategy. In each of the Sword and the Shield slide decks, I'm going to add in a slide about, more information about the point of how this portfolio works, the idea behind it, the focus on it. So we'll get into that as well as for our Sword portfolio. So if you watch the Shield portfolio, you'll see that. 2 separate strategies, 2 separate outcomes, right? Like, that's the kind of point I'm trying to make. They're both investment portfolios, but they're both different in how they operate. So this is going to be the Sword portfolio for our weekly numbers, week number 3, as of Friday, August 1st, 2025. And as of today, if you're following major news cycles, Trump's reciprocal global tariffs, global, it's a key word there, kick in today. So the companies are still, in my opinion, trying to figure out what the future's like, because these tariffs are on, off, on, off, on, off. They started originally April 2nd, and here we are, August 1st, and we're still just barely putting them on, and we don't know if it's going to go off over the weekend or on Monday. We have no idea, right? Anyway, you're going to see in the charts crazy bad numbers, right? And the point of this portfolio is being volatile, so it's fine. I don't care if this portfolio goes down. The Shield portfolio, when it goes down, I get very frustrated because that's the portfolio, that's the primary. This is the ancillary, right? When this portfolio goes down, I'm like, shit's happening, Right, so we'll talk about that. But we'll see this week number 3 as of August 1st, 2025, on Friday, the day Trump's tariffs are supposed to go into effect. Global reciprocal tariffs, right? Again, that could change on a whim tomorrow, who knows, right? But as of right now, it's showing in the market. So let's go over it. So we have what I affectionately call my weapons of finance. Specifically, this is the Sword, right? So we have the Sword here. This is the Sword portfolio. The Shield, as far as the weapons of finance strategy, is a different one, right? It's a different strategy. The Shield is different, and the Sword is different, all right? But they are my weapons of finance. This is how I deal with the market overall. So the weapons of finance for the Sword portfolio is primarily, this is the kind of way I break it down, like big top level, or I should say high level view of how we look at this portfolio. So this is the ancillary portfolio. Ancillary meaning it supports the primary, which is the Shield portfolio. So any kind of gain I get in this portfolio, I'm likely going to sell it and give it to the Shield portfolio. The Shield portfolio, I never sell out of it. I just grow it. I'll buy and sell the 6 ETFs within it to move money around, but I never sell out of it. If anything, I will, and this will be something later I could cover, but like I'll take a loan against it. Like I'm just going to keep growing this portfolio, and I'm going to take a loan against my equity. I'm not going to sell my equity for the money. I'm going to take a loan against it. Completely different topic, but that's the Shield portfolio. The Sword portfolio is volatile as fuck, and that's the point. So, ancillary. It supports the Shield portfolio, meaning it is not the important one. It is the less important one. If this one goes to 0, I don't fucking care, right? I won't be happy, but I don't fucking care because this is ancillary. The Shield is the primary, right? So I want to make sure those terms are understood when people are understanding these 2 portfolios and how they work together. Because how they work together is the Shield is essentially the slave to the Sword is essentially the slave to the Shield, which is the primary, which is the owner. All right. When the Shield goes down, it's a problem. I need to fix it. When the Sword goes down, I shrug my shoulders. I'll be like, what's next? Right? Like, I don't care. Right? I don't care. This portfolio is made to be sacrificed, right? I want to emphasize that. Every week going forward, I won't go into this much detail every single time, but since I'm breaking down this in an individual point basis, I want people to kind of understand that. So ancillary, less important, right? Less important. I want people to understand that with the Sword. It supports the primary, which is the Shield. Okay. Tangent, I apologize. Anyway, next. Offensive strategy. Offensive. So we're being aggressive with our investments. The Shield portfolio is defensive strategy. We're not being aggressive, right? We're being cautious. Right? So this is offensive strategy. We're going all in on these stocks. We'll talk more about, and we're trying to make money. Long-term and high growth potential. So we're picking individual stocks, and we're not just thinking of what's going to happen the next few weeks or months. We're thinking multiple years into the future, long-term. And over those multiple years, we want to get high growth. Right? We want to make money on it. Long-term, high growth. We're picking these stocks. More importantly, we're picking these sectors where we think there's profitability, and we're riding them for the long term. Aggressive volatility and risk. So aggressive volatility is there's going to be wild swings in the portfolio. And today's a great fucking example because August 1st, 2025, apologies, the Trump's reciprocal tariffs go into effect. Now, again, that could change. He's already changed it multiple times. It could change again. It wouldn't shock me if he changed, right? But as of right now, it went into effect today. And the markets fucking sold off today on Friday, August 1st, 2025. You're going to see that in every fucking single stock I show you today. It's a bad week. Week 3 is not a good week. So, but that's the point. This portfolio could go to zero. I don't fucking care. Aggressive volatility and risk. That's the point. Here we go. Focused sector investments. So we went through 10 sectors. Went through the energy sector, which is our nuclear stock. Went through the water sector, which is our desalination stock. Went through the agricultural sector, which is our greenhouse stock. Went through finance. We got Coinbase. Went through AI. We got Palantir. Blah blah blah. Multiple sectors. Right? We chose sectors first. Sectors first. Right? We're investing in sectors. We pick a stock in a sector. It's like saying we pick a horse in a horse race, right? There's a bunch of horses, right? But they're all in the same race. And I'm picking one horse out of that race, right? So sector investing. We pick multiple sectors. And again, of those targeted stock opportunities, which are listed right here, I do pick Palantir for AI. I pick Coinbase for finance. I pick Rivian for automotive. I pick AeroVironment for defense. I pick Village Farms for agriculture. I find specific stocks in those sectors, which I think can be successful, right? Long term, like multiple years. Now, I could change those stocks at any time because, again, the sectors are what's important. The stocks can be changed. I could change any one of these stocks for another one in the same sector. So, as an example, if I take Palantir as the data analytics one, I could pick any other data analytics stock or AI, stock that's very popular right now. I could go after the biggest one, just go after NVIDIA, right? Everyone goes after NVIDIA. It's the biggest one, right? But I wanted more software-focused AI and data analytics, so I chose Palantir. Another example could be, what's a good one? Hold on. I could say Coinbase, because I chose it as my finance sector. I could just go after like JP Morgan, the biggest fucking bank in America. It's technically finance, right? They're both finance, how I define it. They're both finance. But I chose the growth opportunity, right? All these are growth opportunities. So I pick specific stocks which I think are high growth in these sectors. Anything could change, right? I don't care about the individual stocks. I care about the sectors. So I want to kind of make that point apparent. Then we have streamlined management. So my Shield portfolio is dynamic. When things change in the market, I change the portfolio. This is more streamlined. I kind of follow the same pattern all the time. I'll rebalance quarterly, right? Just to sell off on the winners and buy the losers, essentially. Just rebalance. And then the additional, if I have some good growth in this portfolio, and this portfolio's total value exceeds the Shield's portfolio, we'll say 50 to 70%, right? So if the Sword portfolio is worth 50 to 70% of the sword's value is worth 57% of the shield's value, then I would sell off the shield portfolio, reduce that down maybe 30 to 20% all the way down, and then take that profit, give it to the shield portfolio. Because again, the sword is the ancillary, which you see up here, and the shield is the primary. All right, so the management on this is less. I set it and forget it, essentially. So I want to keep these slides up for each portfolio slide deck so people kind of get an idea of the point of the strategy and what I'm doing in each one, because they're not two of the same, they're two different in how they operate, right? So even got a little animation here, or an animation, a picture here just to kind of visualize something different, right? So anyway, weapons of finance, my sword and my shield. And today, in this video, we're going over the sword. All right. Super long sidetrack. Anyway, portfolios net worth as of today, August 1st, 2025, global reciprocal tariff day. We're at $129.16, and we're down 18 cents for a total gain, and we're down our total return 0.919%, 0.19%, right? So we barely opened up at $100. We're on week number 3, and we're already down. That's the sword portfolio. That's the point. It's wild. So here's our portfolio weekly data for week number 3. We have a current value of $129.16, as you saw. We have a net cash flow of $30 right here. It's down $29.34 because a little bit of a sell-off. It looks like on July 29th, there was a deposit, or probably actually July 30th. I apologize. July 30th, there was a deposit, $30. Remember, same as the shield portfolio. Every week, I will auto deposit $10 out of my bank account into this cash account, because it has to go in the cash account first to go into M1's cash account. And then from the cash account, it goes to the investment account. The rule of the investment account is it has to exceed $25 in the cash account to invest in the investment account. So on my third investment, which is July 31st, 2025 in this portfolio, I've now have $30, and now it's depositing it into the investment account. So it bought $30 of now of our 11 different investments, ARC, and all our individual stocks, which we'll go over. So again, just like the shield portfolio, same process. Process. That's the same. Investment strategy, completely different. Process the same. Investment strategy, completely different. So, weekly data, week number 3 is a chart. And then all-time data, because I have no other data because it's only week 3, right? We're up net cash flow, $129.34. That's the initial $100 deposit, opening up this account, starting from scratch, starting from $0, put $100, and we're trying to keep this the minimalist account as possible, just $10 per week, which does a $30 deposit every 3 weeks. So here's that July 30th deposit. We have a market gain of negative 18 cents over the all-time data, and dividend earned is 0. And then we have a total gain of minus 18 cents, where the money weighted return is negative 19 cents, or 19%. I apologize. And our weekly, I got so caught up with all the information. The market gain is down minus $9.69. No dividend earned, so it's just down $9.69, which gives us a negative money weighted return of 7.7%. So again, this is the super volatile, no fucks given portfolio. And look at this sea of red on these stocks right here, just to prove that point. So since there's so many in the snapshot, there's the vertical view where everything's like squinty and small and it's hard to see. And then I chopped it in half and did the wider view and I stretched it. Maybe I shouldn't stretch it. I'm trying to figure out how I'm going to lay out this data. I think I'm going to just split it in half and not stretch it. Anyway, this is how it looks. So we have our individual ETF and then our 10 individual stocks. So one ETF and 10 stocks. So our target weighting for all these investments is the ARC ETF is at 20%, and all of the 10 stocks, their target weight is 8%. So there is no favoritism. in the individual stocks, and there's no favoritism in the ETF. The reason why the ETF has a higher percentage is because it's an ETF of multiple stocks, and some stocks overlap with some of these other ones that you see in this portfolio. So it's a lot of focus on high growth. But anyway, this is our weekly percentages for week number 3. So we'll go through it. Our ARK ETF for the week is down 7.96% for a market loss of $1.94. And again, a lot of this is from literally today. The market sell-off today was crazy. Like there's, again, global reciprocal tariffs started today. So I'm showing this at market close, or after market close on Friday, on August 1st. And this is the result, right? So so like I said, ARK down. Our energy sector stock, New Scale, down 13.97% for a market loss of $1.52. Our water sector stock, Consolidated Water, down 5.04% for a market loss of 47 cents. Our agricultural stock, Village Farms, is up 4.33% for market gain of 44 cents. The only one up out of all of these. I don't know how that's even possible because everything else went down, right? Crazy. Thank you, Village Farms. Holding out, just at least one. My financial sector stock, Coinbase, down 21.97% for a market loss of $2.10. My automotive sector stock, Rivian, down 11.22% for a market loss of $1.14. My data analytics stock, down 3.15% for a market loss of 31 cents. My healthcare stock, down 13.38% for a market loss of $1.39. My defense stock, down 4.89%. AeroVironment, down 4.89% for a market loss of 48 cents. My aerospace stock, Rocket Lab, down 4.78% for a market loss of 51 cents. And my manufacturing stock, Stratasys, down 2.91% for a market loss of 27 cents. That's my weekly percentage drops for these investments. Like I said, today, August 1st, 2025, global reciprocal tariffs officially went into effect. Until known otherwise. It's changed multiple times. Trump's changed multiple times. We'll see. But this is the effect. Right? So again, this is why this is the SWORD portfolio. This is why I said all this stuff. See, offensive strategy, long-term high growth potential, aggressive volatility and risk. Aggressive volatility and risk. That's the one right there. Focus sector and targeted stocks, right? So this portfolio is crazy. Right, so that's our weekly. All time. So this is since portfolio's inception, which has only been 3 weeks. So our ARK ETF down 3.92% for a market loss of 76 cents. Our energy sector, New Scale, up 18.85% for a market gain of $1.36. Water sector, Consolidated Water, down 8.39% for a market loss of 66 cents. Agricultural sector, Village Farms, up 14.60% for a market gain of $1.13. Finance sector, Coinbase, down 26.78%, market loss of $2.14. Automotive sector, Rivian, down 4.25% for market loss of 33 cents. Data analytics, Palantir, up 6.30% for a market gain of 48 cents. Healthcare sector, CRISPR, down 0.91% for market loss of 7 cents. Defense sector, AeroVironment, up 1.56% for market gain of 12 cents. Aerospace sector, Rocket Lab, up 15.48% for market gain of $1.17. And manufacturing sector, Stratasys, down 6.12% for market loss of 48 cents. So that is all the data of week number 3. Now we get into our stock charts. So I've moved my horizontal trend line to basically kind of beginning of this year, around between March, April, June, in that time frame, where there's like been a bounce in the market, and this is pretty much post 90-day pause. So there's the original tariffs on April 2nd, and then the pause on April 9th, and then the intermittent back and forth of all the shit, and then now today's global tariffs, and that's why you see the sea of red on here on the side, except for Village Farms up 8.45% just today. Ironically, that the agricultural stock, the fucking crop stock is the only green stock on the fucking list. Oh man, it's so funny. I'm sorry, but arc down. Look at this fucking candle right here. Oh my Lord in heaven! Look at this candle. Boom! April 1st, July 1st. I'm sorry. Yeah, there you go. April 1st. Bam. Right. Bam. Where's my? This is gonna be a fun day. This is so bad. There you go. Bam. Right. Down 5.88% in a day. Right. 5.54 right here. I should just use these numbers. I shouldn't even waste my time. So this is just one day right here. Bam. This is all Trump's global tariffs. You're gonna see a whole fucking sea of red today. SMR new scale. Bam. So here's my bounce line around $12.80. I use this green arrow just to kind of show the major bullish trend that we've had since then, and then bam, look at this red candle. Look at it one more. Look at this. Bam. Just in one day, 11.5%. Right there. 11.5% right there. Right? Crazy. Consolidated water, right? We bounced off this $23.08 line, call it. It has a big run up, and it's been trickling down, pun intended, since July the 7th. And then boom, just of course, global tariffs, down 2.27%. Right? And then Village Farms, what is going on? So bounced off this 50-cent line because it's so fucking low. Look at it on a 5-year chart. Just, right? Just horrible. Right? But agriculture is real, right? We got this bullish setup happening. And then today specifically, on the 1 month, look at this fucking candle upwards right here. Just a 1 day, 8.45%. 1 day. One fucking day, right? It's all right there. In fact, zoom in. Boom, it's right there. So Village Farms, only gainer. Coinbase, oh my god, look at that candle down. So we popped off our low line at 152, big fucking run up, and then look at this fucking candle coming down. Oh my god, dude, down 16.70% right here in 1 day. Ironically, Trump's supposed to be the crypto president, but look at Coinbase selling off 16.7% on the day he's doing global tariffs. Global economics has not began to develop in the minds of crypto investors. I can tell. It's evident in the charts. Don't even get me started on Bitcoin. It's already down. You saw my shield portfolio video, you already know it's down. Dude, Stratasys. So here's our low line, about 890. Been an uptrend. It's been actually coming down since July 23rd. But obviously, more recently, it's been coming down. But this has actually been a downtrend. So the 3D manufacturing has been kind of in a downtrend. Rivian, have our low line around $10 in this uptrend, and it's been coming down since July 25th. Again, with this current trend, though, it's been coming down just with the tariffs, just more problems. Although I believe all of Rivian stuff's made in America. I could be wrong. I could be totally wrong on that. But it's down 3.81%. Stratasys is only down 2.22%. Palantir. I shouldn't even talk shit on Palantir because look on the all-time chart. Just crazy. Right? Here's like a low line around 80 where it just bounced and it just kept going up since. But yeah, of course, since the tariff day, it's started to come down 2.58%. Not the end of the world. CRISPR surprisingly didn't come down a lot today, but it has been coming down since July 24th. It's coming down, right? That's acceptable, right? If the trend's already down, that's fine. But this tariff day shit just boom. AeroVironment have a low line around 110. Popped up there. Super spike happening in June 2025. All the way up to June 25th to June 30th. It's gone kind of sideways. And then this Trump shit Tariff day pause and this boom was dropped 2.83%. The Rocket Lab got this low line around $17 and then big run up. It's actually been coming down. So since July 17th, the tariff day, right down 2.42% in a day. Whoopsies. All right, so let's look at if there's any recent data. Let's see, we got bullet point list on, let's see, start with ARC, ETF, news, and the past 7 days. Bullet point list on ARC ETF news in the past 7 days. Okay, so we'll get. See if there's something happening. Obviously, the trends are crazy. But listen, ARC Devastation ETF, ARC performance. ARC has experienced a rebound with the stock rising, price tag, blah, blah, blah. DFA has shown a 1 month price increase year to year, blah, blah, blah. Cathie Wood's investment moves. ARC Invest, led by Cathie Wood, has been actively buying into market dips, adding positions in Amazon, Tesla, Tempus AI, Reddit, and Meta. Across its ETF portfolios, ARC Invest named Soul Strategies as the exclusive staking partner for its digital assets Revolution Fund, indicating a strategic shift in its digital asset investment approach. So they're choosing Solana. Interesting. Hold. ARC's rating is hold by some due to resilience. Tesla, blah, blah, blah. Cathie Wood remains optimistic about Tesla's performance, blah, blah, blah. Market regulatory outlook. Cathie Wood commented on the potential impact of second Trump presidency, suggesting that replacing FTC chair Lena Khan could ease M&A restrictions, benefiting ARC's tech-heavy ETF. Okay. Wood criticized SEC chair Gensler as a barrier to crypto adoption in the U.S. Yeah, that's a known. That's not fucking special. That dude was not crypto friendly. Okay, so now let's do SMR stock. Stock performance. Meh. Endless rating. Meh. Investor conferences. NewScale Power announced that its management will participate in several upcoming institutional investor conferences to discuss company development. Okay. Market sentiment. Nuclear energy stocks, including SMR, have seen increased interest due to growing demand for clean energy, particularly with AI centers. It's a major talking point. Though some sources note a speculative stock price and ongoing unprofitability concerns. It's fair. Technical analysis. TradingView reported a bullish flag breakout, blah, blah, blah. Upcoming earnings. NewScale Power is scheduled to release its Q2 2025 earnings on August 7th, 2025, with a conference call at 5 p.m. Eastern Time to review results. So the week after that, I should see some info on that. I'd be happy to see that. Market context. Nuclear energy stocks, including SMR, surged due to supportive comments from Secretary of Energy Chris Wright. Though a recent U.S. Department of Energy announcement caused a temporary dip in micro-reactor stocks. In small modular reactor, micro-reactor is even smaller than small modular reactor, but still very powerful. It's a very powerful reactor. Zacks Analytics, SMR was featured in Zacks.com Analytics blog, highlighting its role in the nuclear energy sector and growing adoption of small modular reactors, blah, 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 blah. Okay. SMR, CWCO. Nothing. No significant news. There's been no major articles. Okay, that's fair. Every day doesn't have to be, or I should say every week doesn't have to be something. It's fine. It's not a big deal. Actually making this video easier. Saves time. If nothing's happening. Alright, I couldn't find much, blah, blah, blah. June 20th, 2025, Village Farms held its annual shareholder meeting, indicating ongoing corporate governance activities. June 13th, Alliance Global Partners issue a buy rating, blah, 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 don't care. June 9th, Village Farms regained NASDAQ compliance, securing its listing status, which stabilized investor confidence. That's good. June 9th, that was over 2 months ago, almost 2 months ago. June 2nd, the company completed a transaction to privatize its fresh produce business, forming a joint venture with Vanguard Foods. Know about that. May 28th, multiple reports highlighted Village Farms CEO making significant stock purchase. Know about that. This is getting older and older and older. Okay, so nothing new. Okay. Remember, this is news in the past 7 days, right? So even though it'll fucking draw on other stuff, I'm focused on this week. So here's a bullet point. Q2 earnings disappoint. Coinbase reported second quarter earnings below Wall Street expectations, with revenue of $1.5 billion and retail trading volume at 43 billion. Missing the anticipated 48 billion share dropped more than 7% after hours trading. Meh. That's analyst expectation. That's fine. I'm worried about, I focus on developments. I'm not worried about that, but that's fine. Good to know. Stock price movement. Coin stock fell 5% in the week, about 5% rise, blah, blah, blah. It's numbers. I can look at charts too. Market performance. Coinbase stock has gained about 50% in 2025, ranking it among the top 15 gainers in the S&P 500, which it joined in May. Its market value is now over 95.6 billion. Strategic partnerships. There you go. Coinbase announced an expected partnership with JP Morgan Chase, introducing direct bank to wallet links, Chase Ultimate Rewards Transfer, and the ability to use Chase credit cards for crypto purchases. Dude, like the largest bank in America? Fuck yeah. Do it, Coinbase. Fucking do it. Fucking do it. Tap JP Morgan. Tap Jamie Dimon on the shoulder, be like, what's up, bro? We're partners now. Fuck yeah. Do it. Do it. That's a big one. Do it. Do it. Right? PayPal collaboration, also another big one. Coinbase and PayPal enhanced their partnership to boost adoption of PayPal's stablecoin. Oh, I didn't even know PayPal is stablecoin. PYUSD. Okay. Offering fee-free purchases and one-to-one USD redemption on Coinbase platforms. You know, OG Bank, JP Morgan, and the new online bank, PayPal. Two big partnerships. Bitcoin holdings. Coinbase held 11,776 Bitcoin, valued at 1.3 billion by the end of Q2 2025. It's a lot of fucking Bitcoin. That's a lot of fucking Bitcoin. Analysts outlook. Analysts provide a wide range of targets, coin, blah, 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 blah. Market context. The broader crypto market saw a 0.53% decrease in total market cap, 3.81 trillion, with Bitcoin's dominance at 60.87%. This context may have influenced Coinbase trading. Blah, 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 blah. What's after coin? Stratasys. Some good news on Coinbase. Interesting. SYSS, right? Oh, SSY. Oh, stop. I fucked it up. SY. SSYS. My bad. SSYS. Stock performance, close at this number, don't care. The stock has shown 3% return over the past period, indicating strong momentum. Product and partnership outlets. Yeah. Stratasys announced the commercial launch of P3TM Silicone 25A, a high-performance material developed with Shinetsu. I think I remember this, aimed at enhanced 3D printing application. So it's still good to know, but I think I already covered this one. Extended its multi-year partnership with Andretti Global, continuing to serve as their 3D printing solutions provider. Okay, sounds good. Released GrabCAD Print Pro 2025 and updated print preparation software designed to reduce time, complexity, and cost in additive manufacturing operations. Sounds good. Market and financial insights. Stratasys is trading at a market capitalization of approximately 898 million to 996 million, as reported every 7 days, blah, blah, blah. The stock is listed on NASDAQ and suggests a camera analysis needed to determine if it's good, blah, 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 blah. Upcoming quarterly financial results as expected to be announced in 13 days from July 31st. That's interesting. Okay. Stratus, Rivian, RIVN. Again, I'm just getting my updates. You know, I just want to know what's going on. My investments. I'm not the day-to-day analyst, you know. It's my long-term game. All right. Stock price movement, blah, blah, blah. Rating, trading, blah, blah, blah. Endless ratings, good company downgrade, blah, blah, blah. Removing, blah, blah, blah. JP Express, Bears, blah, blah, blah. I don't care. Georgia factory update. Rivian announced it will resume preparatory work on its planned Georgia factory in August, with intentions to break ground early next year as part of the establishing a new East Coast headquarters in Atlanta. Already talked about that. That's good. Workforce reduction. Rivian laid off approximately 140 employees, about 1% of the workforce. Prepared for the launch of its more affordable R2CV 2026. Cover that. Rare earths in some market context. New highlighted concerns about U.S. dependence on China for rare earths, critical for AV production, with Rivian mentioned in discussions about concerning this dominance, because countering this dominance, which is true. Technical analysis, indicator sales signal, blah, 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 I don't care. Financial outlook. Rivian is expected to announce its quarterly financial results on August 5th, 2025. The company maintained its adjusted EBITDA loss guidance of $1.7 billion to $1.9 billion for 2025 and raised capital expenditure guidance of $1.8 billion to $1.9 billion. Losing a lot of money, apparently. Market sentiment. Charles Lemonides of ValueWorks highlighted Rivian as a potential value pick, suggesting it may withstand competition in China, blah, 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 blah. Opinion Schminion. Rivian, PLTR. This is going to be a good one. The AI one's always a fun one. What's going on in the field of data analytics, Palantir? Let's go. Stock performance, stock surged, blah, blah, blah. Shares hit all-time high of 160.39 on July 25th and closed at 157.59, up 1.21% in the past 24 hours, July 28th. Yep. The stock's market cap reached that much. Despite the rally, the stock's price earnings P is that much. Don't care. Endless rating. Piper Sandler gave a fucking opinion. Don't care. Loop Capital gave an opinion. Don't care. The average analyst rating. Don't care. Some analysts expressed caution due to the stock's high valuation, with warnings of potential risk for new investors. No shit. Earnings expectation. Palantir is scheduled to announce Q2 fiscal year 2025 earnings on Monday, August 4th, with consensus forecast expecting earnings of 14 cents per share, up from 9 cents the previous year. Okay. Q2 revenue is projected at $939 million, a 36% increase, driven by adoption in government and commercial segments via artificial intelligence platform AIP, one of the products. Government contracts. The U.S. Army announced a consolidated enterprise deal with Palantir, potentially worth up to $10 billion, offering volume-based discounts and replacing dozens of smaller contracts. New catalyst includes the Warp Speed for Warships Navy initiative, boosting government partnerships. Warp Speed for Warships. I love that name. Our shipbuilding in this country is pretty bad, so if that's referencing that and helping it, that's probably a good thing. Market sentiment and technical analysis. Technical analysis is bullish, weekly charts, blah, blah, blah. Traders on X warn of potential profit taking, blah, 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 blah. Option traders showed mildly bearish sentiment, blah, blah, blah. AI strategic developments. Palantir's stock rally is attributed to AI-driven optimism and its expanding role in government and enterprise partnerships, particularly through its Foundry and AI platforms. Agreed. Analysts highlights Palantir's transformation from defense-focused company to a potential AI leader for Fortune 500 companies. Yeah, pretty good company. I like it. That's why I chose it. CRISPR. Here's a bullet point. July 28th, Kathy Wood ARK investment offloaded $16.4 million worth of CRISPR therapeutic stock while purchasing shares of Pepsi and Iridium, indicating a shift in portfolio strategy. No worries, Kathy. Do your thing, girl. Make that money. July 29th, 2025, an article from the Motley Fool highlighted 3 key factors for CRISPR Therapeutics' future the high cost of complexity of its lead therapy, Casgevy. I gotta look at that name. I know I'm mispronouncing that. The potential of its developmental pipeline, all these fucking drugs, or all these procedures, and the company's early mover advantage is gene editing technology. It's very true. It's very early. That's kind of the point. Yeah, it's very early. No additional news. Okay, no worries. That's the point. This is like going into the future of the technology. It's not basic healthcare. This is like future healthcare. So it's fine. I expect volatility. That's the point of the sword portfolio, as we're taking on volatility head on. Stock price movement. This is AeroVironment. Blah, day range. Blah blah blah. Analyst rating. This motherfucker gave it a fucking price target. That's great. An average analyst rating. Blah blah blah. Don't care. Pentagon drone policy boost. Shares surged due to a U.S. Department of Defense memo on July 11, 2025, indicating increased drone production and deployment, with Defense Secretary Pete Hegseth ordering the removal of policies slowing drone development. This is seen as a catalyst for AVAV, a major drone manufacturer. So I saw this last week, but this feels a little more descriptive, so I think the AI is giving me a little bit different information. Or not, I shouldn't say different, ancillary information. I got the primary story, now they're giving me a little bit more. It was good, it sounds good. Legislators support the passage of the One Big Beautiful Bill Act, provides $150 billion in additional defense funding, aligning with AeroVironment's AVAV's focus on unmanned systems, potentially driving future or further demand. I'm sure they'll probably get a little bit of that money. New product announcement. AVAV announced Skyfall, a concept for next generation Mars helicopters. Mars helicopters. They already got the one on Mars. Fuck. Oh my god. I'm blanking on the name. Well, anyway, they got the one on Mars as a helicopter. It's incredible. Anyway, developed with NASA's Jet Propulsion Laboratory, highlighting innovation in aerospace applications. Skyfall. Interesting. I'm about to look more into that. Market and industry context. AVAV benefits from Pentagon reclassifying drones as consumables, opening the door to rapid demand growth. Interesting. That would make sense. Like if they think consuming like ammo, dude, the Pentagon will just cash the checks on that shit. My taxpayer money. But at least I turn around and make a profit off the defense spending. Opening the door to rapid demand growth. This aligns with broader industry trends favoring AI-powered drone systems and battlefield automation. Okay. Whew, that was a lot. And last, but certainly not least, the future of the human species. Rocket Lab, RKLB, right? RKLB, yep. Alright. Analyst coverage. Craig Holland said some shit. That's great. Citi did some ratings. That's great. Bank of America did some stuff. That's great. Stock price movement. Yep. The price definitely moved. That's great. Stock fell. Yep. Despite that decline compared to previous week. Yep. As of July, trading. Yep. On August, stock price. Yep. Market sentiment. Jim Cramer. Infamous. The infamous Jim Cramer. One of the hottest stocks in the universe on an unspecified day. So the online joke is the reverse is going to happen because he said this. So he said it's the most hottest in the universe. It's going to go down now. Mixed option sentiment, blah, blah, blah. Analyst warnings emerge about stocks valuation, blah, blah, blah. Whoa. Particularly after hitting a golden Genesis Fibonacci level at 43.17. What the fuck does that mean? I use technical analysis too, but fuck, what does that mean? The stock was not as part of the Dork Meme stock group. D-Nut, Open, Rocket Lab, and KSS. What the hell? Highlighting its role in recent gamma squeeze frenzy. What the fuck? I don't even know what this shit is. D-Nut. Is that Donut? That's amazing. Is that Duncan? Is that what that is? It's amazing. D-Nut. I'm sorry, I'm getting so off track. Operational. This is stuff I actually care about. Had to go through so much bullshit. Alright. Operational and strategic developments. Rocket Lab completed a critical design review for the Space Development Agency's T2TL-Beta constellation and significant milestone for its space system division. It's good. The company announced a partnership to aid in the build-out of its Neutron rocket landing pad. Fuck yeah. Supporting its upcoming Neutron rocket launch plans. That's the big one. That's what we want with this investment. We want the Neutron. Rocket Lab requested regulatory permission to transport oversized Neutron rocket structures through shallow waters to a Virginia spaceport, aiming to meet a September delivery deadline. Probably the whole process of fucking landing the rockets. It's like a whole ass process, I guarantee. That's what that is. They're following the process. Financial and earnings outlook. Rocket Lab, market cap, blah, blah, blah. The company is set to release next earnings report on August 7th, 2025, with estimated earnings of minus 10 cents per share for the next quarter, compared to last quarter's minus 12 cents per share, which missed estimates by minus 12.60%. It's fine. Sword portfolio, high risk. That's why we're here. Broader market context. Rocket Lab stock surged nearly 32% within the week, driven by bullish analyst coverage and successful operational milestones. Though its growth-dependent valuation was noted as a potential source of volatility, the company's stock has outperformed the S&P 500 with a 75% surge since June, but analysts caution that it now trades significantly above some price targets. Yes, it does. All right. So that is our rundown of the sword portfolio. So hopefully people will understand the difference between the two, the sword and the shield, how they're treated differently. This is the high volatility portfolio. This is the lose money portfolio. As much as I want to gain money, I'm going to lose money in this portfolio, and that's fine. That's the point of it. High volatility. The point isn't I want to lose money. The point is I accept that this is going to happen in this portfolio. The shield is the defensive portfolio. We struggle to not lose money, right? We struggle. The sword is the fucking casino. You know, we go wild with it. But anyway, that is our week 3 of the sword portfolio. So 2 portfolios now, shield and sword. These are my weapons of finance, right? So continue to hopefully follow along and enjoy. If you have any questions, comments, or criticisms, let me know. Have a good day.